But what do we have today? The bloodbath continues.
Dude, I thought when I opened my platform this morning, I thought that it would just hadn't refreshed from yesterday because all the net changes look exactly the same. But holy smokes, the bloodbath continues. Maybe that's what we title today's chapter. I don't know where you want to start. Here are all of our markets here, and
I'd probably start.
They're all trading in the direction of the dollar.
I'd probably start with the euro, and then we can jump over to cable.
Sure thing.
Euro is well through that 106 level.
Holy smokes! Did they hit 105 last night?
Yes, they did. Go down a little bit more granular. We got to trade all the way down to 105. Decent bounce off of it. Probably one of the better bounces we've seen in terms of, again, 35 pips in a short amount of time. Other bounces we've seen through this entire fall have not been that big or have taken 2 hours, 3 hours to do. And it's like, okay, when it takes 3 hours to rally 30 points, that doesn't show you there's a lot of...
I should get out now.
There's not a lot of energy behind that buying. Basically, everyone who's bought it is now waiting for follow-through, which won't come.
Yeah, I mean, this is a tough week here. We have pretty much the whole week worth of data for euro dollar in the 15-minute chart.
All but
here.
a one-way. You look at last night when we opened up, they eked out a little tiny rally from 105.40 up to 45. And even that couldn't hold and rolled over. And
I will say, I mean, the net change is down on the day. Euro dollar is sub 105.50.
Right.
They hit 105 last night. You look at the last, hour or so of action.
This is the best two-way. This is the best two-way we've seen.
This is the strongest bounce of the week.
Right.
And I'm not just saying that to try to be optimistic for anybody who's long euros here. But, I mean, you haven't seen, to your point, Pete, now a 40-pip rally that's been a straight shot.
Right.
You've seen from here to here is around 40 pips, and that's a day, and then they immediately annihilated it. The next hour took it all back and then some. So maybe the start of something here. But yeah, this euro dollar has been really tough. And let's get the historical data in here, Pete, because 105 is historically a very, very important price. You and I don't hang our hats so much on like, oh, if it's this level, then it means this, and this has to happen afterwards. But we do like to look at price extremes, especially in such historic markets like currencies, where, of course, you can look at euro-dollar exchange rates for the last 30 years, and tastyfx has them here for you. But you look at the last year or so of action, Pete, and 105 is really the low. I know here in September, October of last year, we punched through 105 for a couple. I mean, this is a daily chart, so this is a couple of days. Didn't get down to 104, so this is really rarefied air for this market. And if I pull up the weekly, you can see that outside of our couple of months of flirting with parity.
Yeah, that flight
again
below parity.
Go back the last 10 years, Pete, and 105, if you take out this price extreme, 105 is very rare.
Yeah. And I think we're going to continue to see, we're rolling into the end of the week. We're at Synthetic Friday.
Synthetic Friday?
Yeah.
Why? What's tomorrow?
Tomorrow's Friday.
So how is today Synthetic Friday? Do I have tomorrow? I have tomorrow off? This is how you're telling me I have tomorrow off?
Well, do you usually have Fridays off?
No.
Okay. So why would we? Oh, so you thought it would be actual Saturday? No, it's Synthetic Friday, which means tomorrow's regular Friday. So you are counted on to deliver those 2.5 hours of precious work. All right? In by 11, Manny Petty, out by 1:30.
You're such a jerk. Synthetic Friday is only when we have Friday. It's Thursday when we have Friday off.
Okay.
That's it. So I'm not coming in tomorrow. I'm calling it here.
I love the threats. I love the threat. I'm going to hold my breath. I've dealt with this for 9 years now. All right, fine. I'm not coming in.
We didn't get Veterans Day off.
Right.
That was... My grandparents both fought in World War II.
Yeah, and that was pretty messed up. Playground. That doesn't necessarily count the same.
You're saying because I haven't fought in any war, I shouldn't get Veterans Day off?
No, I should get some sort of like day off for
Oh, here we go. This is
mental taxing of managing you for the last 8 years, which has been freaking. This is why I look 70. My point being, we're running into the end of the week. We're right at the lows.
You're not 70?
Best bounce we've seen. Let it go, Lee Harvey. It'll be interesting to see, and I want to jump over to cable too, because actually they've done a little bit more. Cable's held in a little bit better. This is sterling. Again, sterling against the U.S.
From in the grand scheme of things, 126.70, where we're trading right now, is not that abnormal for the pound.
A very different chart, and we'll see that play through if we look at euro sterling. But sterling's off, but nowhere near the amount euro is. So, but there is it catching up a little bit? Yeah, this is seeing a little bit. Now, oftentimes I don't play the catch-up trade. I don't sell the outperformer with the idea that they've got to catch up to where the euro is, because oftentimes it kind of bites you. This is the case where. Yeah, they've released below 128 to 126.5. A lot of strength playing through. Dollar yen just continues to go. I mean, this.
Oh, geez, we're 156.
Yeah.
Wow.
Yeah. So,
because we got up to 155 and flirted with it, came off a little bit, and it looked like in here. Let me zoom in so people are like, "What the heck are you talking about, dude?" We got up here to 105. Yeah. And they came off. And I remember, the day or two, it was last week, we were trading 152, 153. Right. And I was like, okay, maybe we'll get a little bit. Wow, 156 now. I mean, 156 even. They just printed it.
And again, this is the dollar moving. And what's interesting today, U.S. rates are lower. Bonds are up a little bit. Notes are up a little bit. So it's not always interest rates have to be higher for the dollar.
It's a relative performance.
This is just dollar strength.
Yeah.
Overwhelm. And the world of FX is comprised of a lot of players. You and I, retail traders across the globe, hedge funds and prop firms trading it. And then let's not forget there's a function that foreign currency transactions provide for the myriad of companies that transact in different countries around the world. They need to sell iPhones in Germany and convert that back to U.S. dollars. Those are called, your treasurer at those places is responsible for hedging foreign currency exposure. If FX doesn't move, nobody hedges because hedging is a cost. But once FX moves, they're compelled to start hedging because they don't want that to be a big impact on revenue. And what you see is the more FX moves, the more they hedge, which tends to fuel the move a little bit. So that's why I talk about when we get to new levels and new ranges, you see elasticity, and the markets tend to run a little bit more. Now, I don't think we're quite there yet, but you'll expect to see, if we get back up to 160, which is going to be all the way up to that, we'll get the piecemeal talk from the Bank of Japan, which means nothing. The market will nowhere. But it'll be interesting to see if we continue to drive here.
Well, you make a great point, and maybe it's more, for me, it's always easier to visualize in like a commodity market like crude oil, where it's like you wouldn't necessarily know this, but it makes a ton of sense that like BP has a huge trading arm of its company. Okay, and they hope that trading arm doesn't have to do that much stuff, because to your point, if crude is trading between $70 and $75 for a stretch of days, weeks, or months or whatever, their whole production,
they're pulling it out of the ground for 30, all's good.
Everything is good. But if that market goes and trades 50, 45, or like we saw, around the pandemic, some of those extremes, you can see those essentially those huge institutions, that flow is unlocked and they have to come in and do something, and you see some wacky moves. And,
you
saw it here as well, where it was like, I remember watching this with you, where it's like dollar yen is just like they're testing these highs, just kind of like dribbling through 150 to 155. And then we have some huge swings back and forth. And after a week's worth of action, the market is back down below where it was. But Yeah, you have at these extremes some really volatile times. Same here, some big swings up here at the highs and then really crushing this dollar for an extended period of time. Right now, we are in that mode of like, we're at those highs or for US dollar in a number of these pairs. We're not necessarily seeing like huge 100 pip plus days across euro, sterling, and everything else. I know we did on the election aftermath, but since then we haven't seen huge days. But we might see some big swings through those extremes and back, or just back at some point here since we're at the extreme.
Go back to euro and drill down to yesterday morning, and this was interesting, something we talked about at Glenn. Let's look around 7:30 our time. So we saw
right in here.
Right. We saw the market at 7:30. We saw CPI come out as expected. Currencies all got a bounce. We talked about this. 35, 40. We bounced from about 25 up to 65. I think was the high, or 106.20. Excuse me. 106.35. I converted my futures terms back into spot terms. 106.35. And it was like, okay, we just had a 35-point bounce on the CPI number, which came in as expected. The question was, is that bounce going to hold, or is it just going to be an excuse for sellers to come in? And if that market turns quickly, that means there's a lot more selling to do. And that's what we saw play through yesterday. The market kind of sat there, tried to hold on to that for not much of a little less than an hour, and it wasn't able to build on those gains and rolled right over. So that really gave anybody who wanted to add to shorts or manage longs a little window to get out, but it speaks to there wasn't two-way trade put back into it. Now, we're going to get the same situation with a less valuable indicator today at 7:30 with PPI, I believe.
Yeah.
Or am I completely off with my days?
No, it is Thursday. You were off with the Friday, Thursday, but you are spot on with what we have for today. We have PPI coming out.
And we got the Chief Chucklehead at 9 o'clock?
And we have this afternoon.
Okay. This afternoon at 2 o'clock.
It's not 9 o'clock yet. It's 2 o'clock.
Okay.
Here we'll have Fed Chair Powell come out and speak. He's not deciding on rates, but he is speaking to some group of people. And if it's anything like yesterday we saw those Fed speeches come through, and that's when we saw them push through those extremes in a number of Forex markets. It wasn't so much...
It was a break in bonds notes and
well, so keep in mind, this was the CPI.
Right.
And then this was the speeches later that morning. And this follow-through was as some of those Fed speeches were coming off. So PPI, same kind of setup here today. PPI about to come out, and then Powell, the big man, this afternoon.
So a lot of moving. If you're a momentum trader, these have been great markets for you to trade. They have giving you good setups to get back in and lean against a short trend. There's some guys who look at it. I was long at 109. How can I be short at 106? You got to parse that out of your mind. Hopefully you manage that at some point. And if you're a momentum guy, a bounce like that is giving you a great opportunity to get back in on the trend, which is the short side. Here we're finally seeing some constructed optics that aren't just manufactured from a data print. I put a little bit more credence towards those. And we're at a cheaper level. I don't know. If you're the contrarian, it's an interesting spot. What I like with this is if this is an interesting spot and you think 105.5 is cheap, you know where you're wrong.
Yeah. I mean, right at 105, it's going to feel pretty rough.
As cheap as you think that is, that's where you're going to think you're wrong. So kind of keep those markets in play. Don't expect the same move off of PPI we did. CPI, be mindful around 2 o'clock, but you're getting good action here. Now, it happens to be one way. So one type of trader, this is kind of a market they thrive in. It'll be interesting if we see some two-way come back and forth here, or the week goes out just dollar strong. I don't know, but this would be interesting.
The last time we've seen that would be a full almost 10 trading days of one direction.
That's a lot.
We don't normally see that. Yeah.
All right.
Cool.
Lots to cover. All right. We'll see you back here on Friday.